Tech startups carry a massive failure rate. Roughly 20.4% fail in their first year, and nearly half are gone by year 5. Meanwhile, specific segments of the service economy report success rates as high as 95%. Most new companies die because of the liability of newness. But there is a pivot happening in the 2026 economy toward essentialism. These are businesses that solve basic, unavoidable problems. They rely on recurring demand and operational moats instead of viral marketing. To understand how this works, we can map these essential services onto a capital scaling ladder. We are going to look at 5 boring businesses generating massive wealth right now, ranking them from the lowest initial cash requirement all the way up to multi-million-dollar real estate empires. The goal is to answer a practical question. How much capital does it actually take to buy into a 95% success rate in today's economy?
Before we get to these weird, boring, and highly profitable business ideas, let's talk about your legal foundation. You absolutely cannot start a unique niche business without a properly structured LLC. Think about it. Whether you're operating heavy industrial machines or managing a messy local service, the liability risks are very real. Most people start these hidden gem businesses as sole proprietors, which means if a machine malfunctions or a client files a lawsuit, your personal savings and home are on the line. Your business must be a separate legal entity to protect your personal assets and keep your home address off the public record. That's where Northwest Registered Agent comes in. Northwest is the absolute best formation service out there. They handle your entire LLC setup for just $39 plus state fees, which includes a full year of their premium registered agent service. What makes them elite is their privacy by default policy. They use their own business address on your public state filings, so your home address stays completely hidden. Plus, they never sell your data, and their corporate guides provide real human support whenever you need it. This legal shield is non-negotiable. I've linked my full Northwest review in the description. Use my link down below to register your LLC today and unlock exclusive discounts. Get your protection handled first, and then let's get into the ideas.
Level 1 on the ladder is commercial cleaning. It is an essential business-to-business service built on multi-year contracts, night shifts, and strict checklists. A solo operator who secures just 5 recurring clients can earn between $5,000 and $8,000 a month. Scale that up to a team of 4, and monthly revenue pushes to $40,000. Level 2 is pest control. You need slightly more upfront capital for chemicals and specialized vehicles, but the demand is legally mandated by health regulations. Customers cannot simply opt out. Profitability here comes down to route density. Operations map out 8 jobs per technician per day and aggressively shift their sales focus from $89 residential accounts to $299 commercial contracts. A disciplined solo operator can pull $80,000 to $120,000 annually. Retention stays high because customers prefer to pay a professional rather than deal with the psychological ick factor themselves. These bottom 2 rungs offer high margins and low barriers to entry. Surviving the physical grind simply demands relentless staff management and tight routing discipline. Level 3 introduces heavy assets, the junk removal and waste management industries. Because you are buying trucks, you must secure permits and pay landfill tipping fees. Because the overhead is high, operators have to make a swift marketing pivot. Elude spend away from low-margin residential pickups and aggressively target high-value, recurring commercial accounts. If you can maintain 35 billable hours a week with those commercial clients, the financials scale quickly. Specialized operators easily pull in $20,000 to $50,000 a month, eventually reaching $720,000 in annual earnings before interest, taxes, and depreciation by year 3. When you have massive fixed costs like commercial trucks, the only way to survive is by offsetting them with guaranteed, recurring B2B contracts. That structure creates total immunity to e-commerce disruption. Level 4 steps away from route-based labor and moves into fixed retail infrastructure with automatic laundromats. Modern laundry businesses are fully attended, tech-enabled operations. The upfront capital requirement is massive. You are buying large-capacity extractors, installing card and mobile payment ecosystems, and adhering to strict site selection protocols. The revenue progression scales with the investment. A low-performance site with 20 washers might do $18,000 a month. A high-performance 60-washer site offering wash-dry-fold services can generate $70,000 a month. The heavy reliance on a fixed location introduces a specific risk. Poor site selection can destroy 40 to 60% of your revenue potential on day one. Sinking massive initial capital into physical infrastructure creates a deep defensive moat. Successful operators see 20 to 35% cash-on-cash returns that an app cannot replace. At the top of the ladder is the express car wash industry. The capital barrier is extreme, requiring $1.5 million to over $4 million for a 120-foot automated tunnel. Using license plate recognition, top operators convert 60% of wash volume into memberships. 1,500 members quickly overtakes walk-up sales. Adding a margin overlay reveals that Base creates $52,500 monthly in pure recurring revenue, stretching profit margins to 67%. The major threat at this level is market oversaturation. Private equity firms are building heavily in Sunbelt corridors, making local zoning protections a crucial asset. The express car wash represents the apex of the boring economy. It combines the valuation multiples of a subscription software company with the physical security of appreciating commercial real estate. This split-screen comparative bar chart summarizes the divide. On the left, we see the high failure rates and volatile margins of tech startups. On the right, we have the 95% success rate and stable earnings margins of essential service businesses. The most practical way to access those stable margins is through entrepreneurship through acquisition, or ETA. You do not need to build these operations from scratch. Buying an existing operator lets you bypass the liability of newness. You step directly into paying customers, a trained workforce, and historical cash flow that banks will actually finance. True wealth in the modern economy is rarely generated by disrupting markets with flashy apps. It is built by servicing society's unsexy, recurring problems that simply cannot be ignored.